Welcome everyone to this morning's briefing. Today we'll be speaking with Pureprofile, delivering their fourth quarter 2021 results and investors briefing. My name is Juliana Rodley. I'm an account director at IR department, and it's my pleasure to support Pureprofile with investor relations. Now, presenting today, we'll have Martin Filz, who's the CEO, the Chief Executive Officer, and we'll also have Melinda Shepherd, who's the Chief Financial Officer. And they'll be discussing the update and the current numbers with you. Now, after we've had the formal presentation, we will have a session where we'll be able to do some Q&A. When we're asking the Q&A, I'd ask that you enter those questions into the Zoom field at the bottom of the screen. We'll try and get through as many of the questions as possible. As you know, we can often get far too many questions, and we'll try and get back to you because we do have your details. So we'll be able to respond to you if we miss out on any questions today. Now, I'd like to hand over directly to CEO Martin Filz.
Thank you very much, Juliana, and good morning to everybody who's joined this call. So I'll just bring up some slides. These were the slides which we shared this morning on the ASX, and we're really excited to be able to present today. So we've got about 40 minutes, run through the slides, bit of detail on each one. Mel and I will be presenting, and then there will be questions at the end. And so if you post those through Zoom, then Juliana will ask the questions at the end. So let's move forward. So firstly, just for those of you who aren't fully familiar with Pureprofile, just a little bit of detail about us. Firstly, we have an aspiration. Our aspiration is that every company in the world uses our insights for their decision making. And that can be either directly with us or through partners, a little bit like perhaps Intel Inside. Our vision. Pureprofile's vision is to deliver more value from the world's information. 90% of the world's data was generated just in the last 2 years. So companies need to understand this data and turn that into knowledge. And that's where Pureprofile comes in. And then our mission is twofold. Firstly, it's to reward people for sharing their thoughts, opinions, and behaviors. So to ensure that people are rewarded for their data, and also provide valuable, actionable insights to businesses so that they can make better decision making. The more I know about consumers, the more I know about my market, the better business decisions I can make. And then I'll let you read this at your leisure, but our key values are discovery, encouraging people to ask questions, understanding more, ownership, taking responsibility for everything that they do, trust, I trust in my colleagues, trust in partners, and I trust in my clients, and team. I know that we act as one team and I have people that I can turn to. So they're core values for us across Pureprofile. So a little bit about what we do. So this is a made-up person, and really what we unpack is we help brands like Volvo, Medibank, New South Wales Government, Bernardos as examples, to understand their consumers a little bit more. So for example, if Volvo knew that this person worked for a non-for-profit, drives a Lexus hybrid, then perhaps they will market to her differently and they'll market high-end hybrid cars. If Medibank know that she volunteers at wildlife conservation, she's a CMO again at a tier 1 not-for-profit, donates 10% of her salary to charity, then actually she's interested in ethical health insurance products. So again, different communications. And then New South Wales Government, they want her vote, but they will actually realise that climate change is the biggest thing will influence this individual. And so really they should start to put forward those messages. And finally, for Bernardos, Australia, it's a great person for them to contact to see if they can increase their donations. So that's what we do. We unpack individuals so that brands can understand the right approach. We have a really, really clear growth strategy, and we put this in place around about August, September of last financial year, last year as well. And that's threefold strategy. Number one, growing our global data sources. The more data sources that we have around the world, the more insights we can give, the more questions we can answer to clients. Secondly, growing our software as a service, our self-service solutions. We have about 5 solutions in this family. The more that our clients can access self-service and can generate their own insights without picking up the telephone, without speaking to anybody, the more efficient we can be, the faster they can receive their data and they can start to analyze that data. And that gives us also scalability. So growing that self-service family. And then finally, by having better technology, by having data points around the world, then our data and insights and our media advertising team, Pure Amplify, equally can grow. When clients want to pick up the phone, they want that extra hand-holding, they want that consultancy approach, then technology, more data and insights helps them. And by being absolutely focused, that has enabled us to move forward as a company. Our business. Why do people work with us? Well, clients work with us because firstly, we are global. We have access to millions of deeply profiled consumers around the world. Secondly, we're trusted. This is really important. We're a 21-year-old company. We're 21 years of age this year. And actually, by being 21 years of age, we're trusted in the marketplace. A company might be gathering insights that they're making multi-million-dollar decisions on those insights. They want to know it's a company they can trust and they can work with. And then delivering the right service. So quick response, personal service, dedicated teams. They can get hold of people when they need them. So that's why companies keep coming back and why new companies work with us. What do we offer? Really 3 key areas. Firstly, data and insights. Data and insights is when clients want to understand about their consumers, about their market, etc. They might run surveys, they might just be looking at data, they might be looking at their own data, and we help them unpack their problem, we help them understand their audiences better. The second division, self-service platform. As I said, we have a few products within this platform, and this enables companies to access insights and campaigns through our proprietary technology platform 24/7 as and when they want them through a subscription service. And then thirdly, Pure Amplify Media. Why do we have a media arm? We have a media arm because 90% of all insights are so somebody can sell something to the consumer. I want to understand about maybe a mobile phone. I want to understand somebody's voting habits. I want to understand about donations, charity, etc. It really is so that I can sell more phones, win more votes, or increase donations. And so it makes complete sense. We have a media arm which goes from insights to activation. And how do we do that? We do that by having a global panel. So we have a panel around the world. We have data points and insights around the world. And then thirdly, that's self-service. So that's how we deliver those insights and to our clients by being trusted. Now, where do we do this? So today we have offices in 7 countries. We actually opened Singapore in September and we opened mainland Europe in January. We have 700 clients globally, 155 staff. Of those clients, 85% are repeat clients and 20% of our revenue is reoccurring revenue. Now, we might only have offices in 7 countries, but actually in financial year 21, we delivered insights from 91 countries. So already we are recognized as a global insights provider, even though today we don't have offices in all of the main markets. Our people and culture. This is really important to me and to everybody in the business. You're nothing without your people. Your people make the right decisions. They're the reason that clients keep coming back. Our teams solve problems and deliver everything that we need. So higher client satisfaction, higher employee retention, higher profitability, increased motivation and productivity, and improved employee health and well-being. That is all key to us as a company. And we are actually very balanced also as a company. Gender diversity is very balanced. Our nationality and ethnicity is very balanced. Also age across the organization, from younger to maybe, it's very nice, they did a cutoff at 40 years for myself. And we also rolled out an employee equity plan in March this year. So everybody feels that they're part of the company and have skin in the game. And because we spend a lot of time and focusing on our people, actually our employee satisfaction is today 86%, and that's up 14% year over year. So we have an absolute committed team that is solving problems today for our clients. As I said, we're a great place to work. In actual fact, 86%, up 14% on prior year. Anything above 78% is defined as the best place to work. It's defined as an industry-leading organization. And just, again, you can look at this on the ASX, and just to pull out a couple of statistics, 98% of our employees would recommend Pureprofile as a great place to work. If you're ever going to call up a friend to say to a friend, hey, come and work with me, you're only going to do that for a company that you're enjoying. And also 97% of employees are proud to work for Pureprofile. So feel that everything from our environmental, social and governance through to our delivery of clients and the way that we work as an organization, I'm actually proud to go out and say that I work for Pureprofile as a company. It's really, really important to us. Now, I'm going to hand over to Mel, who is going to run through our financial highlights.
Thank you so much, Martin, and welcome everyone to our investor update for Q4. So first, I'm going to have a little bit of a chat about Q4 results. So we had a very, very strong finish to the year for Q4 results. It was our strongest quarter of the year, as you can see from the revenue there of $8.4 million, which was 58% up on the same quarter last financial year. The most important thing that I'd love you to take away from today is actually the growth in our SaaS business in the quarter, which is obviously shows that our strategy, our clearly defined corporate strategy around growing our SaaS revenue has really paid off. So in the quarter 4, we obviously launched our Flybys Partnership, and we also did a pilot launch of our Audience Intelligence product. So you can see that we had really strong growth in our SaaS platform business of 225% in that quarter. Amazingly strong revenue growth, and that was not only in the APAC region but also in the UK EU region, where you can see we had much stronger growth than APAC at 71%, and that really shows that we're really getting traction in our global strategy around markets outside of Australia. We also had really fantastically strong net operating cash flow of $922, which actually helped us finish the financial year at $3.6 million cash in the bank, which was up on 3.4 in March. So an amazing quarter. We were incredibly proud. We've been accelerating our revenue growth every quarter all year, and it was just a fantastic result for us. If you go to the next slide, please, Martin. So how did we finish up the year? And just a point that these results are preliminary and unaudited, but we hit revenue of $30 million for the year, which is 24% up year on year across our entire portfolio. Our EBITDA was $3.1 million. If you've been following us since the start of the financial year, we've actually been putting out guidance that started at around about $2.7 million at the start of the financial year. And as we've progressed through the financial year and our results have been really strong, we've upgraded that that EBITDA guidance to $3 million, and we exceeded that at $3.1 million, which was 124% up on last financial year. Our operating cash flow for the year was $1.5 million, which is 576% up. And we actually had operating cash flow of only 200,000 last financial year. So you can really see the difference in the revenue growth, as well as making sure that we are growing our bottom line results as well. We had, again, really strong revenue in our core data and insights business. You can see there from this chart or from this table that the growth in both regions, APAC and outside of APAC, was 34% up year on year. And our SaaS platform ended the year at 1.1 million, which was 119% up. So a fantastic result. We're really proud of our teams and what they've achieved this year, and thrilled that we can say that we've exceeded our EBITDA guidance. If you go to the next slide, Martin. And I thought this is a really fantastic slide to show as well, just to recap where we've come from. So you can see here in pretty much all charts, the operating cash flow, we'll say, is a quarterly one for this financial year. You can see that we've actually grown our all metrics over the last financial year and from following on from FY19. So you can see from a revenue perspective, revenue dipped down a little bit last year, predominantly due to the media business and also from the COVID impact in that last quarter of the financial year. And then we've bounced back up to $30 million worth of revenue. And you can see we've really grown our bottom line. If you look at the difference between FY19, where we had a EBITDA loss of $1.7 million up to 3.1, that's a significant turnaround from a bottom line perspective over 2 years. Our data and insights business has been growing strongly year on year across all regions, and a lot of the growth obviously in the global outside of the APAC region has really delivered some of those fantastic results. And then you can see the increase in the SaaS revenue. So that really demonstrates that the corporate strategy is really paying off for us. And then just the final slide, please, Martin. Just to recap on our capital expenditure. So this year we've had a really disciplined approach to capital investment. So we're very clear about where the company's going, and we've actually, our investment focus has been on those products that we really want to accelerate. So we've been disciplined in our product development. You can see that we're investing less into capital expenditure, but actually getting a much higher return, as illustrated by our results. And just a point there that our capital expenditure and the amortization is independently audited. So I'll hand back to you, Martin, but thank you.
Thank you very much, Mel. And as to echo your comments, they are amazing results. It actually is a lot of work that Mel and the team started doing back in financial year 20, and you can see that turnaround from -1.7 to +1.4, and that momentum is now accelerating through into financial year 21. So thank you, Mel, and great results. So let's have a little dive into some operating highlights. So firstly, key operational performance indicators that we keep, and we're starting to share those across to all of you as well. And I just want to pull out a couple here, and every quarter you will see how operational key performance indicators are moving. But I just want to pull out a few which fit in with our strategy. So firstly, growing our data and insights business, 71% increase in completed surveys. They can only do that if, move across to the 2 to the right, we've had 51% growth in that panel data acquisition. So we've grown our data. That has directly impacted the improvement or increase in the number of surveys we can do. The one in the middle, 58% growth in the number of SaaS clients. So really excited about that. And slightly above that, 40% of all new clients now come from our new global markets. So those are 3 key measures we see increasing, and we see feedback to our strategy and then feedback to better results. Now, blue chip clients use us. And here you can see on this slide, many that you will recognize: Afterpay, JB Hi-Fi, Westpac, Coles, etc. So 21-year-old company, 700 clients, as you would imagine, blue chip clients use us. Why? So look, again, these are all on the ASX. Have a look, and I don't want to go into this, but our client community is really important, clearly. Our NPS score, that's the Net Promoter Score for financial year 21, was 82. So this is going back to our clients. Every time our client runs a project with us, we actually give them a satisfaction survey. So we can immediately get feedback about that project from that client and take action where is needed. And action can be, if they're really happy, make sure we do much more of that with many more clients. If there's been a blip, again, look at how we can overcome that. So 82% is our NPS, Net Promoter Score. Anything above 72 is actually in the top quartile. You are a first-class company. So we're so delighted with that, and that's why clients keep coming back to us. And really, it's for a few reasons. Firstly, again, it's trusted quality insights that we deliver. So that's the first and foremost importance to any client. Secondly, it's speed. They want those insights as quickly as they can possibly get them so that they can give the recommendations back to clients. And then also it's price. It's about recognizing it's the right insights, the right time, at the right price. And then finally, it's about being a partner. It's about ensuring that everybody across the organization is working for that client, no matter how big or how small. We've been in the news in the last year. So Joe, that heads up the marketing team, they've been very, very busy. And in actual fact, we've had 287 individual articles. Now, these might be thought leadership pieces where people across our company actually are seen as thought leaders and give those pieces to press, etc. So that's thought leaders. New hires, everybody's interested about people that we hire at Pureprofile because we hire the best, and that's news. Clients that we win, again, very interesting clients that we win, work with, such as Coles and Flybies. It's about understanding things, new products that we launch. It can be many, many reasons, but that's 287 reasons the world is talking about Pureprofile today. And I just wanted to pick out a couple of solutions to focus on. So, firstly, our Audience Intelligence. This is one of our SaaS products, our Audience Intelligence solution. This is really exciting. So we launched this at the end of April. And at the end of April, we have access to 400,000 Australians' data, and we're able to give insights. Clients can log on, they sign on for a 12-month contract, they log into our system, they can understand how are they doing versus competitors, how they're doing in the market. Then they can send surveys to the people to understand why people are acting certain ways, and then they can actually send out media campaigns. It's a really exciting product. Just launched it first in Australia, and then we will launch it also around the world. Now, Audience Intelligence update, and I talked about this a little bit in a previous presentation. So firstly, it's unique. So we're really excited. We've been shortlisted for the SaaS Innovation Award from the Australian Business Awards in 2021. That is amazing. We launched a product 2.5 months ago. We are already shortlisted for a major award, so that is fantastic. We also have patent applications pending because there are certain absolute unique elements of this solution that stand it aside from anything else. It's unique in the world. Increasing interest from clients. So we're really excited that the first client that we signed was Uber Eats, pretty well-known brand. Many of you on this call will use Uber Eats. Uber Eats today uses Audience Intelligence to understand more about their clients, their market, and their competitors. So, and we've got a number of trials running with other food delivery verticals, so that's pretty cool. And then we also have, as I said, we finalized in the quarter the food delivery pilots in Q4. We have fast food going live, should be this month actually, and then we have retail going live in next month. So retail is our really explosion of this in the Australian market. That's over 250 clients, and everybody you know, so whether we're talking about Harvey Norman or JB Hi-Fi or Seed, etc., all of those clients are able to log into our audience intelligence solution, understand more about their clients, their market, etc. So this has got off to a flying start, and we're really excited about audience intelligence. The other one that I wanted to highlight was our partnership with Flybies. So we created, again, in our SaaS family of products, we created Pureprofile Perks. Pureprofile Perks links directly with the Flybys system. As I said, it's all fully SaaS automated. No humans touch the system. And so Flybys members can earn rewards by giving their opinions and doing certain activities. It all links through SaaS. And it really is, firstly, in Australia, it's unique having that seamless link. And secondly, it's opened so many doors to us around the world because Flybuys is recognized around the world. Now, when I have conversations with similar clients or similar companies in the US or in the UK, today they know we work with Flybuys. So they literally ask us, why do Flybuys work with you? How can we work with you? I don't have to give any sale about Pureprofile. So it's really, really, again, exciting solution. We launched this only on the 26th of April. So at the beginning of Q4, a Flybuys member has joined Pureprofile Perks every 300 seconds since its launch. That gives us much more data points in Australia. Since it's launched, 27 million Flybuys points have been earned, and in actual fact, every 60 seconds, 300 more Flybuys points are earned. So that's really exciting. And then the final one, which really, again, results directly in revenue, we've delivered 95,000 survey completes of Pureprofile Perks since we launched at the end of April. And so we haven't, as there was a soft launch, a slow launch. So really that was only fully up and running in June, and we've got some amazing results. So everybody is delighted with that solution. We put in here a couple of case studies to again understand why clients work with us. So please go to the ASX release and you can see this. So the first one, Business Australia. So it's not just consumers, but it's also business users that we deal with. So they wanted to increase member retention rates. How do they do that? They understand their members better. And by understanding their members better, what did that result in? 190% increase in new members, 1,000% increase in website page views. And we talked about our NPS earlier. They had a 28-point increase in their Net Promoter Score. So hugely, hugely appreciative of everything that we did about delivering insights, understanding their members. The second one, we've got Flybies up here. What was the challenge? Flybies wanted something around their members. They wanted their members to earn rewards other than shopping. They wanted a seamless environment where their members could go from an app or go from web to actually being able to do surveys. And what have the results been so far? So 27 million Flybuys points earned, 95,000, over 95,000 surveys have been done. And since we've been talking, many more members have joined because every 300 seconds a new member joins. So that is another really exciting case study that, as I said earlier, not only delivers in Australia, but really gives us a springboard for the rest of the world. And then finally, I've got Bernardos up here to give you a flavour of a different type of company. Their challenge, they wanted to increase donorship. Why? Because they want to support more families. So again, this is our media arm, Pure Amplify, running a campaign. Every campaign that we run is based on first-party data. What does that mean? We understand the audience first, and so we can deliver a better campaign and we can deliver better results. And that's what we did for Bernardos. So they had a 300% increase in new donations. They had 9.2 million ad impressions and a 12% increase in brand awareness, which is fantastic, and a 6% uplift in likelihood to recommend. Again, this gave us a springboard across the not-for-profit sector. We use Bernardos and we work with many other not-for-profit companies today. And again, it's a globally recognized brand, so we're able to work with Bernardos in other offices. So really excited about those 3 case studies. Okay, we're getting towards the end and we're getting towards questions, so thank you again. So our corporate strategy, what's our progress so far been? And we've talked about this every quarter. So firstly, global panel. What have we done in financial year 21? We've doubled the size of the Australian and the UK panels so we can deliver more insights, earn more money. We've rolled out things like refer a friend, which has lowered the cost of us recruiting those data points. And equally, we've really gone to town on our fraud prevention, quality delivery, so that again, those clients can really, really trust our brand. Second one, more data and more insights. We launched Flybys Partnership, which was a really big team effort. It touched many people's inbox and many people's slate. Flybuys, brilliant organization to work with. There's about 4 months plus development work went into this and more discussions that we'd had. So we launched Flybuys, and then we also launched a community in Singapore. So SGAG, a youth community, really important because that's one of the first communities that we've launched outside of Australia. That gives us a springboard across the rest of Asia. It's a really, really well-known brand in Asia. And then self-service, that's been a long time in development. We launched that in March. We launched a pilot vertical in food delivery. We signed Uber Eats. We're so excited about that. Again, a brilliant client to work with. And we've got food delivery coming up because it's an easy one to do after, fast food is the easy one to do after food delivery. And then we have the biggie. So we have retail where we can really expand our offering of self-service to many more clients. Key initiatives over the next 6 months. What should you keep looking for? New partnerships. So, I mean, discussions with several companies across the US and the UK. And so we will grow those partnerships like we have Flybies here. We will launch new verticals for audience intelligence, touched on that. And also launching some new global panels to focus on how we can grow internationally. And as an organization, if I just took the UK and EU market, the UK and EU market is 10 times bigger than the Australian market. We already have an office there. You will see announcements that we're hiring new salespeople there and expanding there. That gives us such an opportunity, low-hanging fruit. We can grow the business really just by increasing minor market share. So keep looking out for those. We'll keep you updated every quarterly. And so in summary, we're so excited. We've had really, really good, strong growth. Cash flow positive as an organization. We stand on our own 2 feet. We're in charge of our own destiny. We've got it's such a brilliant team with highly engaged employees. I enjoy working with absolutely everybody. And then we've got some really, really cool, exciting solutions that are causing a stir in the marketplace and are meaning clients come to us. So thank you for listening. And I will now hand back to Juliana.
Thank you, Martin. That was fantastic. Now we'll open up the question and answer session. We do have a few questions that are coming through already into the feed. So if you do have a question, if you can type it into that Q&A function at the bottom of the Zoom screen. Now, at the moment, we've got around 9 minutes and we've got about 15 questions already. So we'll try and get through as many as we can. But Martin, I'm going to throw it straight back to you. The first question here. It was great to see the Flyby relationship and the fact that it's working, but really, how many companies like Flybies are there globally that Pureprofile would be able to partner with?
Countless. So look, Flybies is large. And so you take the Australian market, you know, there are 4 big loyalty schemes. You go to the UK and there are hundreds. You go to the US and there are thousands. And that's just really because of the population. So as I said earlier, the Flybuys relationship has opened the door to us and has enabled us to be able to speak to many more clients at a different level than we could talk to before. So I've got a few early stage discussions already occurring, but really excited about the opportunity, especially in the US and the UK. English language, we already have offices, we already have a brand, so those will be the first cabs off the rank.
Great. And here's one about results. So I might throw this out to Mel. We've got a few that are coming through on the results. Congratulations on the solid results. Are the results inflated due to COVID impacting your year-on-year numbers?
Thanks, Juliana. That's a really good question. And the simple answer is no. The solid results that we've had for FY21 are the result of a number of different initiatives over the last 12 months. When I look back on the first quarter that we all experienced, the pandemic, we did see a dip in our Australian business for data and insights only in April. And I think that's as organisations really stopped, paused and wanted to see what was going to happen with the pandemic. But once we sort of got through April, we saw that those clients started their projects again back in May and June. So that's what we sort of experienced from an Australian perspective. Really interestingly, in the UK, we didn't see any dip at all from COVID. And so when you look at the year-on-year results, which I will point out too, that Q4 was a record quarter for us, and our data and insights business had a record month in the month of June. So I think the answer to that is we've had an amazing year because we've invested in sales capability. We entered into new markets such as the Netherlands and Singapore, which helped bolster our revenue as well. And we've had a really clearly defined corporate strategy. So I think all of those different factors have resulted in a strong end to the financial year. And I think as an organisation, you know, we're well placed because of the pandemic to really help companies with decision making. So it's actually been a really positive thing for us.
Thanks, Mel. And while I've got you, there are a few questions coming through here about US growth and European growth. Could you give us a bit of insights on maybe the US numbers? Or I did see in the pack earlier that it does look like you put them together with the European numbers. So maybe you could just run over those again.
Yeah, so we generally report the APAC region, which includes Australia, New Zealand and Singapore. And then when we look at the non-APAC region, or we sort of say the UK, US and EU, that's really the other regions that we're in. So that actually includes the US, the UK and the EU. So all those numbers are rolled up together. As you saw in the Q4 and the full year results presentation, we did have really strong growth in the last quarter outside of APAC, even though APAC was incredibly strong as well. And we're really proud of how our Australian businesses has progressed over the year as well. So we have seen growth out of the US. It's obviously a large market for us, and it's one that we will continue to focus on. We haven't invested new headcount there yet because we've focused predominantly on the EU and Singapore in the last 6 months of the financial year.
Brilliant, thank you. And I'll put this one first to Martin, and maybe Mel wants to add a little bit of colour at the end. What do you think is behind the rapid growth in demand in your DI and your SaaS products? And is this rapid growth a one-off?
That's a good question. No, it's not a one-off. Why have we achieved? It's amazing people. It's amazing people, a clear strategy, so focused on what we're famous for. And it's an amazing technology team. So we have a great technology team, industry-leading solutions, fantastic people. And now that's all wrapped around a strategy that everybody knows what they're doing, how they'll do that, and that's delivering results.
Great. I might have to start wrapping some of these questions together looking at the time. But one group of questions is about growth. Do you think it will be harder for Pureprofile to crack the Asian and European markets?
So the answer to that is no. You would have seen announcements. We've hired some really great people across the Asian markets firstly. So again, Pureprofile, we're able to attract the best in our industry because we're exciting. Somebody said a couple of months ago, it was a good 6 months ago now, we're like a 20-year-old startup. So we've got all of that stability. We've got a big client base. We've got trusted partners. And yet we have that startup mentality of making things happen and making things happen fast. So we're able to attract really good people who bring with them expertise, knowledge, and clients. So across Asia, you'll see with Keith's announcement, there'll be other announcements across Asia soon. Mainland Europe, we just opened at the end of January. Again, industry leader in Yoris. And then we just announced in the UK that we've hired somebody called John Wadsworth. Again, industry leader, comes with 15 plus years experience in our space and 20 plus years experience in research. So, as I said before, the UK market is 10 times, or the EU market is 10 times the Australian market. We already have an established business, so we should see that quickly grow. And when we've added people, we only have to add salespeople because those salespeople are either supported by their hub. If we add in Asia, they're supported out of Australia. Or if we add in Europe, they're supported out of London. And then clients are supported, either they use SaaS products, don't need any support, or they're supported out of India, whereas our central operations. So we only need to add salespeople. So it's an exciting time. You will see new salespeople be added across Asia and UK as Europe as the market, as the year goes on.
And this one might be, I suppose, for Martin, then you might kick it over to Mel as well. Do you have a near-term target of recurring revenue with your percentages or your total revenue? And secondly, looking at the the resilience in advertising spending here in Australia, are you seeing an increase in new brands coming to the platform, especially due to lockdown? So I suppose that one's sort of related to COVID as well.
The first one sounds dangerously like guidance. So look, we don't have. We'll come out after we've done our AGM, etc., with any guidances. But in the meantime, I guess what we talk about internally is we're an upside down company, right? 60% of our revenues come out of the Australian market. And I've never worked for a company such as this before, where Australia is the biggest market. So we internally are saying as soon as possible, our UK and our US revenues would actually overtake our Australian revenues. Now, there's work to be done and people to be added, etc., and partners to be found. But realistically, our US and EU businesses should be bigger than Australian business. So that's internally what we're working towards. Everything is growing globally, picking up that low-hanging fruit and eating into low market share that quite quickly grows bigger than the Australian business. So I think that as a top level is what we're working to as a company.
Okay, there's a question here about M&A and whether you'd be looking to reinvest some of your profits, whether you're looking to reinvest your profits into growth and potential M&A in the space. Did you want to?
Yeah, look, it is an opportunity. So M&A in our space, that means buying somebody who's smaller than Pureprofile, perhaps a French company, perhaps a UK company, perhaps a German company, perhaps a Malaysian company, etc., but a smaller version of Pureprofile. We fully understand the business. It is easy to integrate into our operation. It delivers us perhaps more data points, perhaps increased technology, certainly revenue, certainly free cash. We would only be buying any companies that improve our bottom line today. That gives us an opportunity to do some sort of aggregation roll-up where we're bringing in smaller companies. Ideally, as I said, it's a roll-up, increases our free cash and gives delivery for our clients. today, with the market share or our market cap at about 1 times revenue for a global profitable or operating cash flow positive company, 21-year history. I'm sure the existing shareholders would be a little bit concerned if we went out and bought a $20 million company, for example. So let's first off build from our base. Let's see that share price respond to a great company, great results, continued delivery of our core metrics. And then when an opportunity is right, hopefully that ties in with our market cap being right and all our shareholders can enjoy that acquisition.
Okay, I'm just looking at time. We do have a lot of questions left. I've probably got 2 that I would like to put forward. One is to Mel. Can you tell us more about your cash position?
Yep. Fantastic question, and one of my favourites. Cash is king, as we all know. Look, we will continue to see our cash position grow over the financial year as we did through FY21. And we will see some quarters where you'll see stronger operating cash flow results compared to other quarters. And that's predominantly a little bit to do with the seasonality of our business. Now, we had a really strong, I think there was one question there regarding the Q4 cash conversion. So our operating cash flow for Q4 was 922 versus the EBITDA of close to $1 million. So it was pretty line ball, actually. I think the number might have been wrong in what the cash conversion was there. And there was also a question really around debtors. And actually, if you go into the 4C activity statement, and there was a small chart in the financial trends, we actually had record cash collections in the in Q4. And we've got really strong collection process in the business. So that really helps bolster our cash flow. It's one thing that I'm obviously passionate about, is making sure that we get the cash in the door as soon as possible to obviously bolster our cash flow position. But you will see cash continue to grow over the year.
Brilliant. And I suppose let's just finish on this one here, because I suppose it is about the core of your business. We've had a few questions coming through about who are the survey takers, what do they look like, and how long do they stay with the company? So I know that it was peppered throughout that presentation, Martin, but I'm just wondering if you'd like to close on that question.
Yeah, we deliver insights in two main ways. The first way is just from data. So that is just behavioral data that, again, users give us permission to deliver to clients such as Uber Eats. And so without asking a single survey, I'm just looking at data of what people are doing. It could be transactional data, it could be surfing data across the internet, etc., or it could be sometimes location data. So that's the first sense. Don't need any surveys to be answered for that. And again, data is key. The second area, which is more to your question, is about answering surveys. Last year, we delivered about 3 million surveys. And where we try to work is we try to work with partners. So in Australia, partners include News Corp, they include Flybies, they include Rays. In New Zealand, AA Smart Fuel as examples. And why is that an advantage? That's an advantage because they already have loyalty schemes. They already have individuals who have joined the loyalty scheme. And so they believe in Flybuys points or AA Smart Fuel points or news subscriptions to newspapers, etc. So when we do a partnership and we come along and say, hey, you can earn more of what you've been doing on that site already by answering surveys or by giving permission to use data, we find a huge uptake. And that huge uptake is either because, one, people want to make a difference and they want to share their opinion, and or it's two, because they become points obsessed and they become rewards obsessed. So that is a bit of our secret sauce in working with partners, finding new respondents.
Thank you. Well, thank you, Martin and Melinda. Well, that concludes our Zoom session for today. If you have any other questions, and the questions we weren't able to answer, we will get back to you. But if you have any other questions or you want to learn more, please visit the Pureprofile website, and that's business.pureprofile.com/investor centre. So I'll just throw it back over to you, Martin, to say farewell to everyone.
Look, it's such a great, we don't call it family, we call it Pureprofile Community. And the Pureprofile Community includes partners that we work with, such as yourself, Juliana, so thank you to the IR department. It includes our shareholders, and without all of the comments and feedback, it helps us be a better, sharper organisation, and our job is to get that news out there so that we all, I'm a shareholder as well, so we all benefit from more people understanding the Pureprofile story. It's our clients, so thank you to all of our clients, many of whom are really our investors as well and interested in how we're doing as a business. And then finally, it's all of our people. So, you know, it's working with great people like Mel that I work with, and everybody else. And, you know, it's such an exciting place to be. It's such an exciting company. And I think we're making a little bit of a difference. So thank you to everybody.